All right, good morning, Advantage members. Happy Friday. It's June 23rd, 9:20 a.m. my time. So first thing I want to talk about is here BTC, again, consolidation structure. We can kind of see that I think this is the cap in the market locally on a sideways resistance range basis. This level, let me mark it out for you, is the $30,340.73. Okay, so until we get above this level, right? And in my opinion, if we do get above this level, this high is getting swept. And also, I do believe that this high from mid-April is going to get swept. Okay, so we're going to mark that out on a couple of different hours as well. Take this away. Grab the coordinates of that, and that's $31,050, right? So those two levels are, in my opinion, the next for the taking, this one and this one, if we can get back above this level. Personally, I will say high probability is we do reclaim this level at some point, we do sweep this high, and we do sweep that, 31,050 high, right? After that, I don't know. I don't know if we break down. I don't know if we develop a big range like this and then shoot higher. I really don't know. But one thing is clear is that the market is consolidating right under the point of, this significant high that we put in mid-April. And that could mean that, it is potentially, bullish, and that, it could even squeeze higher. Okay. For now, though, playing the range means that carving out support and resistance points. I think this is probably local support right here in a price action, 15-minute time frame basis. This is really the range that you're probably trading, and it's a relatively tight range, I guess. Let me see here. It's a 2% range. I mean, it's not bad. Pretty normal for BTC to carve out, 1.5%, 2% ranges. So if you're, good, I mean, you can play in and out of this range multiple times. Okay. Same kind of goes for Ethereum. ETH is right now probably in the midst of its own range. Maybe ETH is a little bit different, actually. Like I'd probably say, this is kind of ETH range low. And let's map that out real quick. Let's do that. Okay, so 1,856, and then resistance point here is probably something like this one. I want to say that's probably it right there. Okay, so we'll take that one. Okay, visibility, we'll just keep that on the minute chart, right? 1 to 30 minutes. So this is your range, right? So until ETH sweeps below this low, and again, well, one thing I could easily think of is ETH and BTC can trick you into believing that this is going to break lower, but they just stay range bound like this. Okay, they'll sweep the lows and the highs quite a bit, really trapping multiple sides. And so you want to play this, break down and then watch the reclaim, and then that's your target. If it breaks down and does this, then this is probably a short. Stop up here. Next target is probably like 1825 or 1778 down here. Okay, but I really think high probability is there's going to be a chop fest in this area, kind of like this. All right, now with BTC, like I said, right, the high locally to break is this one, and the high to break from mid-April is 31,050. Okay, ETH kind of similar. Okay, the range bound nature of ETH is like this that I pointed out. Okay, which is between this 1950 and 1850 range, like 100-point range. Even a couple of days back, I told y'all that, we were trading at 1886. I stated that I think high probability we go towards 1934, which we basically did, right? If you look at this chart right here, okay, let's go to an 8-hour chart. See that right there? we went all the way to a high right there, okay, 1933, right? So we pretty much tagged this level, right? Now the question is, I mean, how much higher do we go from here? I do think that ETH has, in my opinion, a propensity to do something like this, and then either break down, or it will do this, come back around, and then tag 2000, which is obviously a very bold psychological number, right? So that's my overall thought process on ETH and BTC levels. Now, there's always going to be, people having conversations about Pepe and Bojack and all these random meme coins. And, that's kind of what happens, right? Like when BTC makes a spectacular move like this, what really people are thinking is, where is like the next bid or the riskiest asset, or rather the asset higher on the risk spectrum that they can bid. But I would kind of posit and say that, well, if you look at Bitcoin dominance shooting up, and overall total altcoins just continuously bleeding down. Like if you compare structures, right, from what BTC is doing, which is, a steady uphill climb on a weekly basis, versus altcoins, which are in fact printing, that's your, this is continuous like lower highs, right? Like this is, in my opinion, not a change in any structure since October. High, lower high, right? Low, lower low, lower high. I mean, these are all sort of equal highs right there. Maybe slight, over and under, but now we're again slowly bleeding down, right? So point is, like, alts have not done anything spectacular, and so dominance ticking up, BTC ticking up should make you want to focus on BTC versus anything else. We don't really place that much focus on alts here and there. I mean, definitely look for trades, right? I'm not going to say that you should completely ignore alts. I'm just saying that probably focus on it on a day-to-day basis, quick ins and outs. Perfect example is a few days back, I had pointed out Fetch down at the lows. I talked about AI narrative, still potentially intact. But again, we're banging right into resistance of Fetch and many other altcoins. And until you reclaim this level, okay, there's nothing to talk about, right? And there's nothing to talk about because this thing could easily keep bleeding and bleeding and put in basically another lower high. And then we just keep bleeding down further and further, 15 cents, 14 cents, and, but beyond. And again, one thing I will say is, if you go to my Twitter feed, one thing I am kind of clear about is I still don't believe that we are out of the woods in the bear market. I do think that we'll have a drawn out bear market, potentially more painful, more bleeding of alts, especially into probably later this year, maybe even next year and beyond. But again, I'm not saying that these movements are not, powerful and they're not, ones to play. I'm just saying that, let's let our cool heads sort of prevail rather than getting excited about a new bull market and whatnot. Okay. And again, I'm happy to be wrong. I'm not here just shorting the market, right? Like, I am more than happy to play the long side of the market because it's much easier and it's honestly like way better of a moneymaker than the short side or sitting on your butt and not doing anything, right? So I'm well aware of that fact. But what you should be aware of is when momentum does get hot, okay, try not to start buying immediately into bull market narratives and let's buy the shittiest token or the next meme coin or whatnot. It's just, it will be extremely painful for you to endure drawn out, bear market if you do start buying at every spike that you get, because this can last, in my opinion, several months, maybe even another year or two for alts. BTC and Ethereum, they're different caliber assets. I would probably even say Solana, but I already told you that I already accepted that Solana has kind of broken its weekly level, a critical weekly level that it had very nicely reclaimed and then broke back inside it. And now it's not showing any signs of reclaiming it. So until you reclaim this $18 level on Solana, there's nothing to talk about, right? I mean, again, this is what you have on these alts. I don't understand, what we're going to, debate about when alts are clearly showing a pretty persistent downtrend. Here's another example. So Elizabeth was asking about Serum. And again, this is not a knock on anybody. I'm just saying Serum and most of these alts are completely out of my radar from like the FTX 2021 bull cycle garbage, right? They're gone. It's like saying like, well, why shouldn't we look at naps? Remember that, shitcoin that SBF and all those guys pump. Yeah, if it pumps 100% or 200%, of course it's going to do that because they're down like 90%. What do you expect? Here's an example of Serum being down 99% from the highs. Of course, you're randomly going to get random 100, 150% spikes. That's like a pure gamble of when that's going to happen and when you're going to have the funds on the right exchange to bet on the right assets that going to spike in the way that it does, right? Most of these are going to be pump and dumps, by the way. So I'm just warning you that the goal of this cycle is to just preserve your capital. That's it. You can try to trade high quality, higher liquidity assets such as Ethereum and BTC, maybe Solana. But other than that, I really, really think that everything else you either want to stay away from, or if you're a really great trader, like in and out and in and out, that's it. Don't even marry your coin more than 24 hours. Trust me. Again, non-investment advice, you do whatever you want to do. But this is my experience from the previous cycle. And everybody's going to say, oh, well, we're in a different cycle and, there's more quality and fundamentals to alts and this and that. That stuff has never really been sticky enough in crypto. It's just stuff that people like to say because they sound cool of, they understand some X part of the technology or whatever, right? But really, most of these alts just don't have staying power because the bear markets themselves are so brutal that the money itself, the interest, the activity is not sticky enough to allow these protocols and these projects to live. So what you really should be thinking about is, the project itself has to prove to you why it is worthy of your attention on a multi-month basis, not on a random spike of a random altcoin that goes up, 100% in a day. Because guess what? I can point to you hundreds of altcoins that are up like 10% or 50% or 100% in the last 24 hours or even like the last 3 hours. That will always be the case. It's just how it is. This is why these things like DEX screeners and DEX tools and all this stuff has come about, because crypto itself has a really big problem of losing a ton of capital, a ton of interest, and the potential of regulators cracking down, governments cracking down, et cetera. So the capital itself is actually getting narrower and narrower. And that means narrow capital means focusing more and more on the riskiest stuff, the smaller market cap stuff, and which basically means pure outright gambling. That's it. That's exactly what happens in cycles where all you're really thinking is, oh, well, what could be the next big thing that pops off next week, next month, next year? And unless you're like part of, the cabal of big VC investors, or you're very astute about forecasting technologies years before they actually really break out, you're really just gambling. At least like if you go to a casino, you might as well get a drink and enjoy yourself. But here, it's just constant barrage of random information and random crap thrown at you from Twitter and people telling you buy this, buy that on desk screener. Like, here's a perfect example: daily gainers, 11,000% a day. There's no way that you can look at this as any normal person and say, oh yeah, that's totally legitimate and I can easily catch one of these, right? No, I mean, most of these are pump and dumps, and you more than likely will be the person who gets dumped on, you know. So I encourage you guys to be careful. Capital preservation, you know, like I said, look at the market in a very, very cautious light. All right. That's really all I could say. Again, none of it is investment advice. It's just my experience and my thought process in, you know, being more than now almost 13 years in financial markets and almost 7 years in crypto, you know, 7.5, 8 years in crypto now, actually. So be careful. I'm just, you know, here to give you guys my thought process. You are free to do whatever you want. Good luck to you. Please do, you know, keep asking me questions. I'm going to do my best to keep harping on capital preservation, risk management, because that's all I can do on a daily basis, because I care for you guys. I care for my members, and I'm going to keep delivering my content in the same way that I have for the last, you know, 5 or 6 years, day in and day out, preaching the same thing about risk management and capital preservation, because that's really the only way to win this game. And it really is just a game of, you know, it's a game of probabilities. It's a game of, you know, looking at markets from a selfish perspective, which is, you know, locking down your P&L, forgetting about all the crap that other people are trying to shill you, right? That's, you know, all secondary. The primary purpose of you being in markets is to learn and make money, okay? And again, learning and making money without ingesting too much garbage and too many gambling style, you know, shit coins or tokens. Okay, that's it, everybody. That's all I have. Y'all take care. Good luck. Chat soon.